What's up, guys? Welcome back to 10 Baggers. So, I consider myself a long-term investor and don't usually like to make massive speculative plays. If I do, usually it's very small, like 2% of my portfolio. So today I just want to share with you guys two speculative stocks that I've been looking at. One that I currently have a position in, and the other one I just day traded. So before we get started, I would just like to say that these are riskier stocks than what I normally do videos on. So, manage your risk. Don't buy lots of the stock just because I made a video about it. But these are two stocks that, if you find the right entry point and you play it right, they could make pretty good returns. Alright, so without further ado, let's jump into the video. What's up, guys? Hope you're doing well. Today I'm going to talk about a stock I have started a small speculative position in. Retail stocks have rallied from their pandemic lows, and this one is a laggard that could see a decent improvement in stock price due to the rollout of the vaccine. The stock is Express Clothing Stores, ticker EXPR. Personally, I never liked their products as I like to dress like a construction worker, but I know they're popular with some people. Being largely a mall operator, the company has been materially affected by the pandemic due to the closure of malls, and the stock price has reflected that. With that being said, the stock could present a decent risk-reward at the current levels, considering the imminent reopening into summer 2021, and as I also do not think they're going bankrupt. The stock is currently hovering around $1.20 per share after seeing a 52-week low of 52 cents, which I wish I bought. Although the stock has already rallied over 100% from that 52-week low, I think we could see some upside this year back to pre-pandemic levels, which were around $6 per share. The brand is a household name and exists mainly in malls, and will perform better as malls get more foot traffic due to the rollout of the vaccine. In addition to the tailwind of increasing foot traffic, the company has worked diligently on plans to improve their e-commerce efficiency. The CEO was positive about their progress in raising e-commerce revenue throughout 2020 on their most recent earnings call transcript. I personally think that there's no reason that the company won't continue to grow their e-commerce offerings and see more success in getting sales through that medium. What impresses me the most about EXPR is that they are a company currently valued at a market cap of $80 million, but are still capable of selling 1 billion products. They had 1 billion in sales last year. Now, it's a fact that their margins are pretty bad and they're burning through cash due to decreased revenue during the pandemic. But any company that can sell $1 billion of any product at an $80 million market cap immediately becomes interesting to me. It's certainly a solid value proposition. The company is not in amazing shape, and their debt-to-asset ratio is increasing, but they are unlikely to go bankrupt anytime soon as they just received a loan facility from Bank of America to help see the pandemic out. I think EXPR will see a solid improvement in revenue in quarter 3 as the holiday shoppers were able to go to malls and shop online for their presents. If a good earnings result causes buying pressure on the stock and it makes a move back closer to pre-pandemic levels, I would probably be a seller of the stock at that time. Again, this is a small speculative position for me and not a forever hold. The reason for this is that although EXPR offers a decent value at the current stock price, I typically only consider companies with significant competitive advantages for the long-term holds, which I'm not sure that EXPR possesses right now compared to other retail giants. For transparency, I have just under 2% of my portfolio in EXPR at a cost basis of $1.20. I will keep you guys updated on my thoughts on the stock on Twitter, so be sure to follow me at 10x Baggers. Another stock that could benefit from the reopening is AMC Movie Theaters, ticker AMC. The company recently received a loan and is unlikely to go bankrupt before the economy reopens. There could be a lot of demand for the movie theater experience in a few months as people have been forced away due to COVID. What makes AMC particularly intriguing as a short-term investment is the percentage of the float that is short. Basically, the float is just the total amount of shares in circulation for a stock. When the percent short is high, it means that a lot of investors are betting that the stock will go down. Usually this is bad for a stock, but if there is any unexpected buying pressure on the stock, it will force shorts to close their position, also known as covering, and it creates even more buying pressure on the stock. It can create a vicious feedback loop called a short squeeze, and during a short squeeze, you can have a stock make massive moves in a single day. This is certainly possible with AMC as it has a short float of over 50% and is currently being bought up by half of FinTwit. I day traded AMC today and I made a few coins, but I might start a bigger swing in the stock if we see the shorts attack more in the coming days, bringing the stock back down. You could see this type of price action in retrospect in GameStop's ticker, GME. The stock showed a massive battle between shorts and longs all summer and into the fall. When the longs finally won, the stock shot up over 100% over the course of a few days, which was 10x from its summer lows. A real 10-bagger. I can foresee something similar happening with AMC stock and will be watching the price action closely in the coming days. I wouldn't consider holding AMC long-term as I am not a believer in the movie theater business model, but it could be an awesome short-term speculative investment. As always, just make sure you manage your risk with these type of things. Risky penny stocks, you can always end up down quite a bit of percent. Just my one piece of advice to anyone looking at swinging AMC right now, just really make sure that you watch for a good entry. Don't just buy it when you see it going up or you think it's going to keep going up. Wait for a dip. Wait to get a safer entry point. That way you have less risk on the table. It's just better to have a lower entry point. And I think if you're patient, sometimes you see throughout the day you might get that better entry point. All right, so that's my quick video on EXPR and AMC. Let me know what you think about these stocks. Would you be a buyer of them? Would you short them? We'd love to hear your guys' thoughts. And as always, happy bagging, folks.